my dance, make it hurt.
Good day, everyone. Welcome to another episode of Let's Talk Commercial Real Estate Investing, the Black Community Edition. It's Education Wednesdays. Thank you guys for tuning in. Thank you guys for sharing and subscribing and spending just a few moments of your time with me today as we all work together and work through to improve our knowledge and networking and share with each other on how to best achieve our goals, which, for me is building wealth, cash flow, and having the ability to fund the things that are most important to us. And also, being an inspiration to others, especially our children, to let them know that there's more than they can do. They're willing to put the work in, willing to build relationships, educate themselves, and then apply that knowledge and know that, there will be failure, but they'll get back up and do it. So today, I just wanted to provide a couple of thoughts that I've had from this week on a couple of things. One, and first and foremost, I happen to be, I'm not the expert in hotels. I've, listened to a couple of podcasts. I've done some due diligence. I look at, a couple of opportunities, especially with COVID. A lot of hotels suffered, but then there were others that were winning. So, in particular, what I mean by that is, so you had your kind of like your economy, your budget hotels, like your budget-in suites, your extended stays during the time period where cash flow is still. And I happened to, when I was listening to a podcast, what's the name, by Dunlap with the guy from Starwood, the CEO from Starwood, talking, just about what they were seeing in their portfolio. Which, on the side note is, one of the things that, I pay attention to is the big guys, right? So what the big guys do, because they're insiders, they own, property in all different spectrums. So they kind of get a little insight of what's going on, what's trending, and create the big thesis. So like Blackstone, right? What they're seeing, and they're talking with different operators within the business, it allows them to kind of see a trend and create a thesis and put money towards that belief. So, listening to that, because they're on a larger scale, they're all over the country, taking cues and seeing how they apply to the market that I'm in, and seeing if it's the same type of opportunity is one of the advantages. Well, at least one of the resources I use to kind of find the advantage. But nonetheless, these extended stays, basic economy hotels, we're doing great numbers as far as revenue. Your limited service hotels, obviously with limited service, you don't have the extra expense of operating the dining room. And then, from what research I was doing, and still am, because I think that's something that we should definitely be into. I know there are people that look like us that own hotels, that syndicate hotels. I don't think they're going anywhere, even with Airbnb. It's just expanded the offerings for different segments of people, right? People are still going to hotels, still booking them. So that hasn't changed. But the offerings and the things you got to do, which comes down to service, expectations, and guest experience, is what really differentiates, your hotel or your product versus somebody else's product. So, anyways, those particular hotels were doing well. When you start researching things, you start driving by, you start picking up on the cues and just start noticing. I don't know what they're exactly called, but it happens. So I would be driving down here in Dallas. I'm driving down 75 up and down, and just throughout the area, working on assignments and just doing some due diligence of my own on things that I was interested in. And you would see, these hotels, limited service, economy hotels, packed, man. And it'd be during the week, packed. Because obviously you got people that, are workers and essential workers and people that are just traveling, heading to certain destinations. And these things would be full. It'd be during the week. And then you come back again throughout the day and you'll see it. So during the day it's full, in the evening it's full. On the weekends, if you're driving, you'll see these similar hotels and they be packed. So it just kind of reiterated when listening to the podcast from Barry, that's his name, from Barry from Starwood Capital, what he was talking about, what he was seeing, and then kind of doing a little research about the Budget Suites guy, about how he started and looking at how he was doing. He became a billionaire off of that particular segment of the product. And then everybody else was suffering was mostly your full service, some destinations, hotels, your large scale 400 keys or 300 keys and even 1,000 key hotels were suffering because their particular business was built on business travel, right? Built on white collar corporation, road warriors. And during the time they weren't going anywhere, right? They were at home, they were doing Zoom. The conventions weren't happening as frequent. So you had a huge operating expense. And then you add to the fact that you got, the expense of food. It was just being very, very costly. So a lot of the hotels were doing their best to hold on to their hotels. Asking for forbearance, and trying not to lose their property. And then even in the midst of that, there was a transition of, having not as many people operating in the hotels. You had the kiosk, you had individuals that were partnering with local restaurants, so that way they can outsource food because, for them, having the staff and not having a significant amount of orders, but just having availability there was costly. And then you had others that were transitioning that, new segments of startups were basically leveraging the kitchens of these hotels. It's kind of what, you have if you see in the headlines of the ghost kitchens, for virtual brands and things like that, or create, allowing the use of the kitchen for commercial uses for local entrepreneurs and for takeout and stuff like that was being used to leverage the opportunity. So, with all that being said, I was here recently downtown, and if you're reading the news, downtowns are kind of in some markets, not vibrant, not a lot of people there. There's people still working from home. A lot of the corporate businesses haven't mandated just yet for employees to come back. So you have a lot of businesses operating, from what I was reading, anywhere from 30 to 50% of the staff that was actually showing up to the office, right? Which that affects, the local businesses, the local restaurants, and the convenience stores and stuff like that were local near the downtown because they rely on the people, during their breaks, during the day, using their services. So while I was downtown, I started noticing, that especially the like the Sheraton downtown. No, it's the Marriott. I believe it's the Marriott. Anyways, large and multiple coach buses are showing up now, right? And I noticed it prior to that, but here it just started hitting my mind about, okay, it looks like, you see people getting off, they got their mask on. For me, it looked like there was some type of nursing convention. So you had people in scrubs, and then you had another group of people in business suits. So some type of convention was going on, or some type of big group event was happening. So it kind of got me thinking, okay, well, is there a turn going on to where people have gotten comfortable, that we've kind of not necessarily got back to normal, but now are more willing to have these big group meetings again, which obviously allows for those, these type of hotels that, or a good chunk of revenue is based on group bookings to use their ballrooms and hotels and their services on top of stuff that's all going on. And then, on top of that affects, again, like I said, the people that are local near the hotel that provide different services and whatnot. So, is this an opportunity for, wherever the case may be, probably more particular in the retail services, to start looking at those opportunities. And then another thing, I wanted to, have a quick discussion was, because I was, I'm in the process of raising money and just speaking with family, friends, and stuff like that, because, we're in the midst of pursuing an opportunity. When you're having conversations with people who aren't predisposed to, first of all, predisposed to real estate, but let alone investing in general, how that approach and that pitch and that discussion is different. And not saying I'm some kind of expert on capital raising or anything like that, but something that I've noticed and that had me go back and kind of try to refine the conversation is, simplifying the message and relating it in terms that, in generalities that everybody can understand, and bringing it down to things that are relatable, and that makes it easier to digest information, especially when you're asking people to commit money to invest. So at the end of the day, they're betting on you, especially when it's family and friends, more so than anything else. And then just having and discussing the potentials of loss and having a transparency of what plans you have to mitigate risk, and then provide additional information to allow them to do their own research and their own due diligence, to have them feel comfortable. So that's something that it's a good big takeaway that I had. And then just again have a discussion about how commercial real estate is valued versus how residential is valued, because obviously most people have experience with buying a home or looking to buy a home or having a rental home of that nature, and how that kind of is definitely different than commercial real estate, which is based on the income that the property generates. Obviously, commercial real estate involved is basically a business, so you break it down to an individual, like, hey, this business is going to generate, $100,000 in gross revenue, right? From either leasing to businesses or leasing to individuals, right? And then out of that, you got to factor in what is the market's, historical vacancy, because you're not going to be 100% all the time. So you kind of factor that in. And then out of that, basically, your gross net revenues out of that, and then now we got to look at the expenses. What does it take to operate the business effectively, to maintain it, to make it presentable, that makes it attractive and appealing for you to maintain or grow the revenues of that property. And then once you kind of figure that out, and then if it's management, and then also putting in above the line reserves for potential capex, because that money has to come from somewhere, right? It doesn't come out of thin air. So that's one of the things that, when you're looking at offer memorandums, you'll see some people have reserves above the line or below the line. And for me, I kind of look at it above the line, and I just kind of reinforce it from, not only just looking at how it's broken down by the operators and syndicators and investors, but also, doing my research on when I first started getting into looking at investing and trying to change my mindset of reading about, how Warren Buffett kind of approached the whole capital expenditures and budgeting for that. So, as an above the line expense, as part of the property, because the money doesn't come out of thin air, it comes from somewhere, and it's coming from the property. And so your ability to maintain the quality of the property, the quality of the business, to again generate the income is important. So taking that into consideration, you're subtracting your operating expenses from the revenue, and it leaves you with your net operating income. And it's that net operating income that is the value to the person that's looking to buy it, right? That's looking to get a return that's going to pay for any debt service, or if they're buying it outright, it's going to provide them with the return for the money that they want to invest. And that is where the value lies in, right? So in essence, there's a multiple, which, in our industry is the capitalization rate, or the cap rate, of what investors are willing to put forth money on a particular property in a particular market. Because you can't really compare apples to apples with commercial property. There's just too many variances. Sometimes there's not enough data. But the investor's willingness to put money down and the type of return they're looking for on that particular product, and using that multiple, that cap rate, to determine, the initial value of the property. And so, using that formula of net operating income divided by the cap rate equals value, or you can do it in reverse, where you have the net operating income divided by the value to get the cap rate. And then explaining that in terms of, like I say, when I was talking about to my friends and family about, what I'm doing, how much money I'm looking to raise, how I'm looking to, have the family participate, especially, people that look like us, very rarely, even think about considering owning commercial real estate, because for some, they believe it's not possible. But as I've been talking about, with leveraging and really just using our collective power and group economics, that if we come together using each other, leveraging each other, that we all can participate. It's not a selfish thing that only I can do it, or only I get the benefits out of it. This is an opportunity for all of us to be in there, especially from a family perspective. But I think that just kind of going back to the basics of understanding, value in the properties, and then really going and digging deep in the nuances, because like I said, I'm always reading, trying to educate myself, trying to learn. I spend a good majority of time of reading on top of the obligations that I have, looking for opportunities, still managing our brokerage, helping clients, which provides even further insight, because we're on the ground realizing, hey, this is what people are looking for, That's what people are asking about. Here's what brokers are talking about, so forth and so on. And then, listen to all these podcasts, these meetings from developers and stuff like that. Just kind of get more insight. But a recent article that I was reading was about convenience stores, right? And so I probably mentioned this before. You start to see a lot of 7-Elevens popping up. Some are gas stations, some would just be inconvenience. Then you also had Circle K that basically made a big acquisition. Murphy USA, and you're probably more familiar with that. For most people, if you saw them in front of your Walmarts, and kind of Walmart now is kind of transitioning to have their own brand as their brand of their own convenience. Same thing with Tom Thumb. Tom Thumb, which up here in Dallas is probably, I'm gonna say, it's Randall's in Houston, and maybe something else in different markets because they own different brands as well. But having their own branded gas stations and convenience stores. And so in the article, basically, because the big push here recently is heading towards electrification, so EVs. Everybody's spending the money now. When before they was like, nah, nobody's ever going to buy an electric vehicle. It's costly, there's not enough range, and now there's the theme, the trend has changed, right? So with that being said, you have your convenience stores that at one point they're selling gas. Well, what are they going to do now? Well, they're going to become charging stations, destinations for charging. And from the article, they're preparing to be locations of that, still providing convenience. And then obviously there's other stuff that's got to be figured out. Supercharging. The convenience you got with gas is that it doesn't take long to pump gas. Maybe a few minutes, pump it, fill up, gone. Or you go in, come out. So with EVs being having supercharger stations and charging pretty quickly, that's kind of the transformation that you're going to have in the convenience stores. And again, convenience is still convenience. And the appeal of that, it's just something you get real quick, spur of the moment while you're traveling. Say you have to spend the time to go into a big grocery store. You just pick it up real quick, get odds and ends, and you're out. Is that a trend that's going to change? And I don't think so. If you think about the whole thing about Amazon, it's about providing options and convenience. So at the click of a button, and with the opportunity to be online and see the vast and wide product selection, you can conveniently have it shipped to your home on certain things that necessarily you're not interested in having an experience about. So it's one of the things about just human nature. And I think looking at those opportunities presents opportunities to look at, especially when you're looking at like QT. QT has been buying up quality corners here in Dallas and pretty much through all Texas here. Every time I see offering memorandum on a QT product, a net lease deal. So just something to think about, something to consider. Like I said, it's a journey on the way to a destination, and we're really here just, like I said, creating a channel just to have the discussions and sharing thoughts, sharing opinions, sharing what we're seeing. So for the betterment of the collective and working together. So, like I said, I just wanted to drop in, had a couple things on my mind, provide a little education, I guess, some tips, thoughts, stuff that I've seen, reading, and just sharing it. And so, as always, like, share, subscribe, comment. Let's continue the conversation. Let's continue having a discussion. And until next time. Happy investing. Let's keep talking commercial real estate, people. Peace.
These my dollars make it hurt.